So this is the statement of net position. This is intended to sort of measure the financial health of the city on a consolidated basis. Entity-wide means everything has been consolidated into one set of numbers. So all your restricted funds, internal service funds, and the general fund, of course, is the more dominant of those. So here what you have, your capital, all your current assets, about $41.5 million. This is mostly cash. And a lot of the cash is really the monies that are collected, of course, and held in your restricted funds, not just the general fund. We have capital assets. That's a lot of infrastructure, streets, sidewalks, and the like, almost $30 million. And then deferred outflows, which I'll get to in a moment because that was a question that came up from the audit committee. Our current liabilities are about $5.1 million. That's things like accounts payable, payroll liabilities, and the like across all funds. Compensated absences that have been accrued as of June 30, 23. And then the big number is the net pension liability, $20 million. That's related to CalPERS. And then the very small, actually, OPEB liability, it's called other post-employment benefits that are paid out when an employee retires. And then deferred inflows, again, I'll talk about. But the bottom section is really the difference in total between the $80 million at the top and the $27 million in the middle. That equals $52 million. Total assets minus total liabilities equals your net position. And you can see there are three components to that, the biggest of which is what's called your net investment in capital assets. So that net position, a large part of it is represented by your capital assets, which is neither here nor there, but it is what it is. But the important part is restricted and unrestricted. Those are monies that are really spendable. They're either in cash or near cash. So there is a restricted portion of 7.8, mostly related to your restricted funds, gas tax, Measure R, Prop A, and Prop C, and so forth. The unrestricted portion is largely the portion that's held in the general fund that's unassigned, as we'll see in a moment. So deferred inflows and outflows, I won't spend too much time on this, but again, it's one of these things that GASB has implemented back in 2002, I believe, or 12. But when you go back, you see that one of the numbers at the top, $9.3 million in deferred outflows, it's shown as an asset. What really this is that these are prepared on an accrual basis accounting, and it's intended to really measure a liability or an asset regardless of the flow of money. So if you write a check on your personal account, you recognize that as an expenditure at that moment, but that's not the case in our accrual accounting. So the 9.3 represents what has transpired since the date of the measurement of our pension liability. So the $20 million was measured as of June 30, 21. It's always 2 years old. But there are things that occur between June 30, 21 and June 30, 23 that we have to reflect. Some are good, some are bad. For the most part, the $93.3 million up there means that we have expenses and liabilities that are going to be paid out in the future. It's sort of a prepaid asset or a prepaid expense. We will eventually recognize the $9.3 million as an expenditure in the future or the next several years, but because on an accrual basis we can't recognize it at June 30, we have to show it, interestingly or ironically, as a prepaid asset or as an asset. So these are the details on page 50 of the ACFR if you wanted to get into that, but just one example is that we did make some contributions after the measurement date of June 30, 21, totaling about $3 million between the miscellaneous and safety plans. So it's a prepaid expenditure. But it also reflects, if you go kind of down the schedule where it says net differences between projected and actual earnings on planned investments, that really means that between the measurement date of 21 and now, PERS has earned less than it assumed on its investment returns. They always assume 6 point something %. So that is going to eventually turn out to be an expenditure in the future. Hope that helps. The auditors have some slides in case you have more questions about that, but that's kind of